What's going on, everybody? Today we're going to talk about a very important tool you have to utilize as a trader to give yourself a trading edge. And if you don't utilize this tool, you will start to see your account take losses all over the place. But if you actually utilize this tool and go through it appropriately, you'll see all these wins start to compound and see that account grow tremendously. So the tool that we're going to talk about today is risk reward analysis and how you can use that to give yourself the best trading opportunities. So what I want you to do is sit back, take some notes, and let's get into the video. Alright, so before we get into the meat of everything here and we actually break down how to do proper risk reward analysis, let me give you an explanation of what risk reward analysis is. So if you're in a position and you'd like to take a trade, you have a stop loss at say at $10 and you want to take your profit at $12, you have a risk reward ratio of 1 to 2. That means you're willing to lose $1 to gain $2. When you're trading out there and you're trying to find the best possible situations, as a trader, you have to figure out how can I maximize my reward and minimize my risk. So when we look at risk reward, we want to keep a ratio of anything above a 1. That means that for every dollar you're willing to lose, you have to at least make $1. If you try to find positions to where you're profiting $3 and only losing $1, that will give yourself an even better statistical chance in the long run on taking these trades. So what we're going to do is actually go through TradeUI system and we're going to find out how we can use risk reward analysis to give ourselves a trading edge. So let's do an example. First thing I do is I sign into my TradeUI account. If you want to log in to TradeUI yourself, go ahead and click that link in the description below and it'll take you to a TradeUI site. They have an awesome discount code for y'all, especially everybody who likes and subscribes to this channel. That way you can save a little bit of cash on your end and utilize this tool to give yourself a trading edge. But the option flow for last Thursday, which was April 6th, we're going to look at UAL. UAL had a lot of option flow activity that day. They had 31 calls, 0 puts. I love seeing that. So I see towards the end of the day, people are actually closing out some strikes, it looks like, so I'm not really worried about that. I'm going to look at the ask. So I'm going to filter this down to the ask, and I'll see what kind of positions people are entering. Let's see here. There it goes. It's filtering down. Internet's running a little bit slow at my house today, guys. Bear with me. There we go. Alright, so let's see. I see a lot of strikes for the $44, $45, $42 range. A lot of out the money. It's very bullish. So this is going to be a good stock to look at. So right now, let's see if we can go to UAL. UAL. Oh. I'll type it in right eventually. There it is. Alright, oh yeah, so we're in a beautiful upward trend, kind of on the backward side of the trend. You see we sold off pretty heavy recently. So first thing we're going to do is we're going to draw some support and resistance lines. And guys, if you do not know what support and resistance lines are, we have another video you can check out to really understand how important that tool is to give yourself a trading edge. So we're going to, this looks like a good area right now. So what I'm doing, I'm looking at the chart on the long term to see if we can find a good rough area for support, which is this zone right here. It's not 100% accurate, but it's pretty strong for the situation we're in right now. And then it looks like we have a good little resistance line roughly right here. So now what I'm going to do, I have my support and resistance lines drawn. My support line's right here. My resistance line is right here. Everything's looking good on the other indicators we have. Nothing's oversold, nothing's overbought. Everything's looking pretty smooth. Looks like we bounced off right here. If I zoom in, we bounced off right here. Looks like we're going straight to test this level again, which is right around $45. So let me get a smaller term chart and we'll look at it and give you a better understanding. Alright, so where we're at currently on the price is roughly $42.65. We have a price target of $45 and we know our support line is going to be anything below this $41.24 mark. So how we utilize this, I'm going to break out the calculator because we want to get us a risk reward ratio of anything above 1. So we're going to take 45 minus 42.66, so alright, $2.34. Alright, and then what we're going to do is we're going to take that 42.66 and subtract it by 41.24. It was what was it? 41.26, yeah. All right, 1.4. So we got a 2.34 profit with a 1.4 to the downside. So 2.34 divided by 1.4. That gives me a risk-reward ratio of 1.6. So for every dollar I'm risking, I could potentially make $1.67. So that's above $1. So this is a good position that we want to take here because our risk-reward is above 1. And honestly, guys, you can kind of eyeball it too when you're doing this. You can look to your downside and see that this area is a lot smaller than this area. So there's a lot more room to the upside is what I'm saying here. And the beautiful thing is, you don't have to necessarily get in right here at this price. What you can do is you can see if it pulls back a little bit and then gets closer to this line here. If you want to wait for it to come down to this area again, then buy, go for it. But as long as you're actually getting in a position that's above halfway, that gives yourself a great trading opportunity. What I mean by that, we're just going to eyeball a line here, okay? I'm going to say roughly right here. So as long as you get in above this line right here, might make a different color for us. There we go. So as long as you get in below this blue line, that will give you a statistical better chance of profiting in the long term, because if you are wrong in this trade, you can actually have a stop loss and get out right at this line or right under this line, and you can take that loss. However, if you actually get in here or anywhere below this blue line, your longer term chance of profiting on more trades actually increases. Because what happens is, say this trade doesn't work, then you only risk $1 per share on your account, to whereas you could have made $1.60 on your account. So the thing is, you always want to enter positions where you're going to make more than you could have lost. Because just because you're risking $30,000 buying how many shares of UAL at 42.66 doesn't mean you hold UAL till it hits 0 on the downside. That means that you stop out right around $41. You take that loss if you have to. Or if you're right, you go ahead and take that profit. All right? Because it's not about how big your account is. It's about how you work the account on the size you have. If you have a $1,000 account, a $5,000 account, a $2,500 account, it doesn't matter. It all works the same. And if you set yourself up for success to where your winners are bigger than your losers, you're always going to give yourself a trading edge. Guys, I hope this video helps. If you want to check out more videos, check out all the stuff we have on our YouTube channel. It really does help out when you watch it. Give this video a like, and if you haven't yet, go ahead and subscribe, because we want to get out more content to you to make yourself a better trader. Guys, we're going to end it here, and I hope everybody has a great weekend.